Hello. So let's see the example. In this example, we will show perpetual and periodic inventory accounting system in three different costing approaches: first in, first out, last in, first out, and also average costing. So in this example, we can say we are provided the material transactions, the movement of materials, uh, in relation to the month of June. We are provided units purchased and units transferred to the production. So on 1st of June, 100 units purchased at a price of 20. So the company paid 2,000. If you multiply 100 and 20, it's 2,000 that you paid to the supplier. On 20th of June, you purchased again 50 units at 22 pound per unit. And then if you multiply this to, that is quantity and price, you will get 1100 organization paid to the supplier. And 24th of June, you have issued 60 units to the production. And on 28th of June, you have issued, or the company issued, a 70 units to the production process. So total purchase 150 units, and the total price company paid is 3,100 pound. And the amount that the company used out of these 150 units, company used 130 units in the month of June 2020. So you can see there is no issued price is being provided, at which price, at which rate the products were being issued, the raw materials were issued to the production process. And another thing is there is no opening stock mentioned in this question. So you may have an opening stock at the beginning, and then you purchase raw materials and then issued and then purchase again, maybe something like that as well. So let's now see how we can find out the cost of goods sold, or cost of materials used in the production, and also how much is the cost of the material available at the ending or closing stock. So you can see the total purchase is 150 and we used so far 130. So how many units remains? So 20 units should be remain as closing stock. As I mentioned before, there is no opening stock mentioned. So if there is any opening stock, so say in the beginning, if it is mentioned that say 10 units or 20 units were available as the beginning stock, and then you purchased 150, so 20 units beginning stock, 150 you purchased, so it could be 170, and then you issued 130, so 40 units should be in the closing stock. But in this question, nothing mentioned as opening stock. So total purchase is the material available, no opening stock. So 150 minus materials used for production 130. So in this example, 20 units should be available as closing stock on the last day of the month. So let's start. So if we follow first in, first out, and if we maintain perpetual inventory accounting system. So as we mentioned before, I'm just reminding you, perpetual means whenever any transaction happened regarding materials that we should be recording, that we should record on that particular day with price and quantity. then we should be able to know what is the closing inventory, closing stock available, held in stock, and how much is the cost of the materials that we issued to the production process. Okay, so on 24th of June, if we apply first in, first out, so the problem says we issued 60 units. So which material we should issue first? If we follow first in, first out, so first in, the material that came first to the organization is 100 units. So out of this 100, we have to issue 60 units at this rate. Okay, so first in, first out, remember. So first in, 100 unit that came first, out of this 100, at the rate of 20, we should issue 60 units. That's the first thing we have to do. So if you see, on 24th, we have issued 60 units from 100 units that we received first at 20. So 60 times 20 is 1200. The material that we issued cost 1200. On 28th, so we issued 60 from here, still we have 40, and we purchased 50 on 20th. So these are the two materials we have. So we are following first in, first out, okay? And on 28th, we are issuing 70. So we have 40 here, remains 40 after issuing 60. So 40 remains. So firstly, we should issue this 40, remaining 40 from here first at 20, and then the remaining amount we should issue from the latest purchase or the next purchase. So the 40 that we receive first, okay, will go first. So 40 at the rate of 20, so 800, and we have to issue 70 on 28th, 70. So 40 we issued from the earlier purchase, and how much remaining, how much more we need to issue is 30 to make it 70. So from the next purchase, that is from 50 at the rate of 22, from this 50 we will issue 30 units to make it 70. Okay, so 30 units at the rate of 22. So the total amount of issue from the second purchase is 660. So on 28th, we have issued the 40 from earlier purchase and 30 from the next purchase. Okay, so, and then out of 50, we issued 30, so remaining 20 is the closing inventory, closing stock that remain in the stock on the last day of the month. So 20 units, the remaining products is actually remaining goods is remained from the latest purchase or the last purchase. Out of 50, 20 units remain at 22 per unit, so 440. So this 440 is the value of closing stock, and if you add all this issued together, this is the total of the materials used, material consumed, or if it is finished goods, if you prepare this for finished goods, then it should be cost of goods sold. And as you can see, the total cost of the materials, whether it is issued or remained, is 3,100. The total cost will remain unchanged. Hope it is clear. So let's see now the next one, that is last in, first out. Last in, first out. So the material that came last will go first. Okay, and still perpetual, so continuous detailed records. So in this case, on 24th, from the same example, we have two options to issue, two materials we have. So the first purchase is 100 and the second purchase on 20th is 50. So two options. In case of last in, first out, so which one came last? The material that we purchased second. Okay, second, this is the product that came last. So this 50 will go first. So on 24th, we have to issue 60. So out of this 60, we have to issue first this 50 and then the remaining 10 from earlier purchase. Okay, so at this rate. So let's see, in case of last in, first out, on 24th, we are issuing the last purchase, the latest purchase, 50 units at 22 first, 1100. And as we have to issue 60, so the remaining 10 will go from the earlier purchase. Okay, so earlier purchase was at 20, so to 200. And then on 28th, we have to issue 70. Now we have only one option. We have only the earlier purchase, that is 100, we already issued 10. So from the earlier purchase, we have 90 at 20. So out of 90, we are issuing now 70 on 28th. So 1,400. If you multiply 70 times 20, so the out of 90s, if you issued 70 on 28th, the 90 remains. From 90, if you deduct 70, then 20 remains at the rate of 20. So the remaining stock, the stock held is 400. So if you add all this together, all issued, then material consumed, cost of goods sold come to 2,700, and the inventory closing stock is 400. And if you add this together, you can see the total cost of the materials remains same, 3,100. So if you compare the last in, first out and first in, first out, you can see in this case, closing inventory, closing stock is higher and cost of material consumed is lower in comparison to last in, first out. In case of last in, first out, cost of goods sold should be higher because we are issuing the latest purchase. And the amount remaining in the stock is from the earlier purchase, and that's why inventory is lower. Cost of inventory is lower in case of last in, first out. Okay. And the next one, come to average costing. It's very simple. It's simpler than the previous two methods. First job, what we have to do in average costing, AVCO, is we have to calculate the average cost per unit. Okay, so the total cost of purchase was 3,100. The number of units that we purchased total was 150. So if you divide 3,100 by 150, it comes to 20.667. I prefer 3 digits, particularly in this problem, because it will give you more accurate result. So on first day, first issue on 24th, we are issuing 60 units, average cost 20.667. Issue comes to 1,240. On 28th, 70 units we issued, and obviously it's both one we will be issuing on average cost. Okay, and also the inventory remain in the stock also be in average cost. This is very simple. So the issued amount multiplied by average cost, issued amount multiplied by the average cost, and the remaining stock amount, ending stock, multiplied by average cost. So 1,240, if you times 70 with the average cost is 1447, and 20 times the average cost, it comes to 413. All right, so the total cost of material consumed comes to 2687, and inventory or closing stock is 413. And again, if you add this together, you can see 3,100 is the total cost. So if you compare with the previous two methods, and you can see the cost of material consumed is in kind of in between those two previous methods, and also cost of inventory is in between last in, first out, and first in, first out. So in the previous methods, it was 2,660 and 2,700. But in case of average, it is in between these two previous two methods. And in case of stock as well, so 440 and 400. And in case of average, it is in between that, is 413. So that's the perpetual. Okay, so we are using perpetual for continuous records. That is, whenever any transaction happen, we are recording the transaction in the books of accounts so that we can track how much we are using and how much material is available at the end. And mostly the bigger organization, or the organization which deals with high cost products, low number of units products, low volume products, use perpetual inventory system. And particularly in this modern age, when we use computer, softwares, different apps, mobile phone for recording transaction, it's very easy now to maintain the records, detailed records for every transaction. Let's now see periodic in different methods, in different approaches of costing. We can see how periodic works. In case of periodic, as we mentioned before, we will count the inventory only at the end of accounting period. So if you want to close your book on 31st of December, you will go to the storeroom, go down on 31st of December, count the material, determine the price, and record in the books of accounts. This is just only once in the period. Or if you close your books, say every 6 months, so at the end of 6 months, go to the godown, count the materials available, determine the price, and record in the books of accounts. So you can see how much material you used and how much material is still remaining in the godown as inventory or stock. So in case of periodic, first in, first out. So in case of first in, first out, what happens? The material that you purchased earlier will go first, will be your cost of goods sold or material consumed. So all early purchased items will be issued. Okay, so total issue is 130. So first 100, so early purchase. So first, all we are assuming in this periodic, all early purchase will go, and the 20 units that will remain in the stock will remain from the latest purchase. Okay, so early purchase, earliest 100 and 30 from the next. So 100 at 20 and 30 at 22. So it comes to 2,660. First in, first out periodic. Okay, and the latest purchase will remain as inventory. So 20 units from the last purchase will remain as inventory because this is first in, first out. The unit came first, already issued. So which products will remain? The products or the goods that came last. So 20 units from the last purchase at 22, that is 440. Okay, so it's not a detailed record, but we are counting which one we issued and which one remain, and we are calculating the amount. Okay, and you can see, you can compare the figures. And last in first out, if you can see, so last in will go first. So all the latest purchased items will be issued. So we will issue 130 from the latest purchase. Which one was the latest? So amount 50 we purchased last. So firstly, we will issue last from last, so 50 at 22, and remaining 80 will go from the earlier purchase. Okay, so total 130 issued. So it comes to 2,700, and the inventory will remain from the earlier or earliest purchase. Okay, because last in already issued, last in first out. So the inventory will remain from the latest purchase. Inventory will remain from the earliest purchase. Last in already out, latest purchase already issued. So the inventory will remain from the earliest purchase, that is 20 unit at 20, so 400. All right, yeah. And in average, as we mentioned before, it's very, very simple, easy. Find out the average cost that we already calculated, 20.667. So how many units we issued? We issued 130 units at 20.667. So it's 2,687. And inventory remaining in the stock is 20 at 20.667. So it came to 413. So this is kind of a shortcut calculation for a small organization. If they are dealing with low price or cheaper products, if anything loss is not an important, is not so significant loss, so in that case they can use periodic and counting inventory only just once at the end of the period, and then determine the amount they used for production and the amount remain in the stock. So the key points that we understood today, we understood what's the importance and significance of the documentation of the material transaction in the overall accounting system of the organization, how material purchase works, who generate the purchase requisition, what are the steps and process of maintaining the documentation, and what are the inventory accounting system and what are the costing system, inventory accounting system, perpetual and periodic, and costing system, first in, first out, last in, first out, and AVCO, average costing. And also we could see if there is any wastage of the materials or if there is any defects in the production process, then how it is being accounted in the books of accounts, how it impact our books of accounts. And hope it helps, and we will be discussing further problems, and if you have any question you can raise in the chat box, or you can ask. Mostly I will urge you to ask in the seminar session online or face to face. So come to the sessions and ask, and I would ask you if you can solve the problem that I showed here. You can solve it, and then you can practice some of the questions from the seminar materials that would improve your understanding. Thank you very much for watching. See you in your seminar and also in the next week's lecture. Thank you very much again.